You are, come on up. So we have Oscar and Christine representing LATAM and the Caribbean. Fred Greer, I hope, is joining at some point here. Idris. I love it when the panelists get a phone call, or he'll be in shortly. So you got the mic. The floor is yours.
You don't have Fred yet. You don't have Fred yet. You guys will just have to do all the prep. Good morning, everybody. How is everybody doing today? Mark, thank you so much. That was a really good session yesterday, where we talked everything from private credit to private equity to real estate, and this is a good continuation of what transpired yesterday. Hi, Giadris. So my name is Mary D'Souza. I am the CIO of a single family office, Misha Investments. I'll introduce my fellow panelists, and then we can discuss what we do. It's going to be really interesting. We'll take you from Brazil to St. Lucia to, I think, Giadris, everywhere, right? You're global. Singapore and Dubai and Europe. So on this panel, we have Giadris, single family office, and doing global investments.
Primarily Southeast Asia, Middle East, Europe. Oh, sorry. Yeah, so
we'll touch on that in a few minutes. And then we have Christine Thompson. Christine is the CEO of Cabot, St. Lucia. And we'll discuss the investment opportunity in St. Lucia. And then we have Oscar D. Cotterly, and Oscar will touch on LATAM. Yeah. So in terms of our single family office, we have invested in various asset classes. We did private credit through Star Mountain Capital, that's going to be speaking shortly. Real estate credit and real estate, as well as private equity and venture capital and public equities. Giadris, maybe you can cover on what you guys do.
sure. So we are a single family office. I mean, we do two themes. One is fintech, another one is connectivity. Connectivity being broadly from logistical connectivity to data connectivity to aerospace. So somebody was talking about Luxembourg. Happy to talk about the space things as well. I mean, there's a lot of things going on in Europe and Middle East on that stuff. Yeah, we are focusing primarily on Southeast Asia, Middle East, a little bit of Europe. We try to do a few things here in North America, but we figured out we are completely uncompetitive. So we get ideas from here, but implement them over there.
That's great. Let me just welcome Fred Greer. He joined us by Zoom. Fred is the CEO of Carolyn Clinic Healthcare System. He runs a pension fund. Fred, welcome. Maybe you can give us a little bit of color in terms of what your pension fund invests in.
Yes, thank you. It's great to join the group. Carolyn Clinic is a health system based in Roanoke, Virginia. We manage just under $3 billion. 1.3 billion of that is in a DB pension. And over the last several years, given the uptick in interest rates in the last year, we've gone from a funded status to 70% to now 95+%. So we're really focused on hedging the liability through long bonds in that portfolio. The other side of our balance sheet, we run about 1.6 billion in a long-term investment pool that's diversified across hedge funds, long-only equity, core fixed income, private equity, private lending. So we are pretty diversified in that, and run a 60% equity target and 40% fixed income target in that portfolio.
Thank you, Fred. Christine, maybe you can touch on what you guys do.
Yeah, hi, morning, everyone. Pleasure to be here. So I'm really focused on all things Caribbean. We've been experiencing what we feel is a bit of a renaissance in the Caribbean. I think, you know, was it Wendy that touched on the real estate issues of the Northern Caribbean and what and climate change is certainly real. And so all islands south of the hurricane belt, so from probably St. Lucia down, have really seen a resurgence on real estate because people are trading. You know, if you look at Baker's Bay in the Bahamas, that was flattened. Florida had a massive real estate surge after the pandemic. And so people are looking for safer havens. And we've seen, I think the pandemic also, first of all, I think it reset people's psychology in terms of their work-life balance. And all of a sudden, sort of, you know, luxury real estate in the Caribbean was a really good idea. And what are we doing? And we're running this rat race for what point? And then the pandemic also obviously created an environment where you could work from anywhere. And so instead of, you know, buying an expensive piece of real estate that you were going to spend 2 weeks in, you could actually work 4 months a year in the region. And so one of the things I'm doing is developing a high-end golf resort and a $1 billion real estate community in St. Lucia. The other thing is that, you know, it's a region of only 16 million people, but you get 50 million people visiting every year. So what can you do now to, you know, build global brands around the appeal of the Caribbean? So one of the things I'm also working on is a new sort of liqueur alcohol product that's a mix of cocoa, rum, spices, etc., that we've just launched. And, you know, it's sort of themes around #Caribbean made, which could be not only from the region, but you've experienced the region. There's some part of your heart that was there and sort of fell in love with something. And now you can go into your sort of home markets and be ambassador for those things.
Thank you, Christine. Oscar, maybe you can touch on what you guys do in Latin America.
Okay, yes. Well, thank you very much for having me here. Good morning, everyone. I'm Oscar. I'm based out of Rio in Brazil, and we're specialists in Latin America, and we're specialists in private markets. We invest in private equity, venture capital, natural resources, all sorts of different private side. But we have a caveat here, which is that we are a tech platform. We are wealth tech, so people invest with us with an online platform that gives them transparency into what we're investing, so you get to see everything that you want to invest in. And also, we can receive capital from 50 different countries. We work as a hub of managers, so very much around local networks. So if we're investing in Mexico, is a local Mexican team. If it's in Colombia, if it's in Brazil, we are a 50 people team. The managers, we have about $1 billion on the management. Personally, we've invested in all these deals by ourselves. So I mean, together with all the investors. So we always put our own money together, and happy to be talking about what's going on in the region. But
Thank you, Oscar. So going to the next step, right? I think Giadris, maybe you can talk about you're doing fintech and connectivity, and maybe you could touch on what you're seeing globally in terms of what's exciting and what you're investing in.
Yeah, well, basically, it's all exciting. It's shopping time now. And I think
because valuations are down.
Yeah, I think basically in last 2 years, I was primarily exiting because the valuations were really so crazy. And I think 23 is going, at least in my markets. I mean, I don't know that much about North American markets, but if we're talking kind of Middle East, Southeast Asia, Europe, it's very much shopping time. That's on one hand, and I think that's a lot of driven from the developed markets. On the other hand, if you look at markets of Southeast Asia, if you're looking at Middle East, I mean, they're really coming from much lower base and very basic things that is still as well-known things like in fintech, you know, or in connectivity solutions is things that you guys have here for the last 10, 15 years. They're just coming. So you're kind of repeating the same pattern.
But they're probably leapfrogging, right? Because they're going to the newest technology.
Yeah, I mean, they don't make the mistakes. So they've learned on mistakes that the guys made when developing that and catching up. So they have a benefit of making the things right. I mean, that's probably more true about Southeast Asia and Middle East. I mean, if you're talking Europe, Europe is still a very comfortable village. So people like being, like I live in Austria and my family lives in Austria, and it's really like, I mean, they're so happy with what they did in 19th century that they don't want to change anything. I mean, Middle East and Southeast Asia is much different. So, I mean, obviously global things affect a lot, but it's more on the mood thing. Like if we had fintech going on for crazy valuations in Singapore and Southeast Asia 2 years ago, right now, guys do not have this flood of capital coming in. So they're becoming more realistic. They know what revenue is, they know what net profit is. I mean, before that, they didn't have that concept at all.
Are you finding that, companies are having a harder time raising capital? It's taking longer since you're very much involved.
Oh, yes. I mean, absolutely. The capital is much more scarce, but that's good because that kind of cleans up all the mess, because before that you can have a nice presentation and raise funds and do whatever, 20 times revenue 2027. Right now, people are talking net profit, real cash flows. So I very much enjoy it. It's really a good shopping time now.
Thank you. Fred, there you are. What are you seeing? I mean, especially since interest rates have gone up this year, you're probably finding probably finding credit a lot more interesting. What are you finding interesting as you do your allocations?
Well, on our fixed income portfolio, we have mostly floating rate credit, private fixed income, which has helped given the backdrop of rates rising this year. So over the last few months, we've been incrementally adding to treasuries. Given the higher yields, we think treasuries are more attractive than they have been anytime in the last decade. We've also been adding incrementally a bit to emerging markets. I would say there's potential optimism in China with some of the dialogue between Biden and the Chinese government, as well as some easing of restrictions in the property market, as well as COVID restrictions.
And also because it's so, I mean, the valuations are so low, right? So that's why
Right.
it's also very attractive.
Exactly. And I think one backdrop that could be a potential catalyst sometime in 2023, if we see economic weakness in the US and rates come back down, we could see the dollar weaken some. So that would provide a nice backdrop for US investors in international developed and emerging markets. We have exposure in Europe. We think in the current environment, next year, hard to say what's going to happen. We think there will be more volatility in the equity markets. So, good long short managers can take advantage of that. Our biggest long short position is in Europe, which, from an absolute return perspective, has not looked good this year, but our managers performed well across the volatility. So we're globally focused. We have dedicated exposure in China on a country level, and beyond that, we have broad emerging market exposure as well as dedicated European exposure.
Thanks, Fred. That was really helpful because we don't see pension funds have that much exposure to foreign markets, and so it was really interesting that you gave us some insight about how you guys invest. Christine, maybe you can talk about in terms of your development in St. Lucia. Maybe you can talk about how other investors can get involved. Is there an investment opportunity? I'm seeing other very large brands going to St. Lucia too. So I wasn't surprised that you guys are putting so much money into St. Lucia.
I mean, I think that if you look at the capital markets in the region, they really have been transforming in the sense of, I think someone was presenting on that yesterday about, the increased compliance and regulation of the US and Canadian. We've seen a lot of the Canadian banking companies start to retreat a little bit. And that to me is a massive opportunity for alternative investment, because there's now, a bit of a sort of scarcity of capital. And then, the paradox to that is on the other side, you see greater access to actually niche capital. So for example, energy transition, a massive theme in the region, because, all of these countries are really drowning under, the volatility of energy prices and need to
and you have so
transition
much
to clean
sun.
tech.
You have
What's
so
that?
much sun over there.
So much sun, so much
Yeah.
wind, all of that stuff.
Right.
And with a massive need now with GDP, debt to GDP levels in each of these countries of almost 100%, there's a need to transition.
Right.
And so you get interesting different sources of capital flows on
And
the
you're also
investment
doing
side.
ag tech and trying to be totally self-reliant, right?
Correct.
In the islands.
Yeah.
Because a lot of food used to come from outside.
Big agri-tech,
Yeah.
big clean tech on the energy transition, as well as hospitality. Yeah.
Thank you, Christine. Oscar, maybe you can talk a little bit more about, I think it's really interesting what you guys are doing in Latin America and, helping develop all these different countries. So maybe you can talk a little bit about
Yeah,
how
sure.
you guys do it.
If I may kind of take one step back when we're thinking
And
of,
one more thing I wanted to talk
Sure.
about, in terms of investors, you're making it very democratic because your ticket sizes are small.
Yeah.
So a lot of investors can get involved.
yeah, true. We built this tech platform. People can invest as low as $10,000. People could invest, although our average investor has about $500,000 invested with us. When we think about global allocations, right? So in any global portfolio, when we're thinking to go outside the US, is for increasing return, but also for diversification of risks, trying to have uncorrelated type of exposure, correct? So when we think about emerging markets playing into that scene, generally people are talking about China. Generally, we're talking about Asia. It's been the most traditional exposure to it. But when we look in terms of Latin America, and Latin America is going through a phase that the best investments are not macro driven. The biggest risk when you were investing into Latin America or emerging markets in general, people would always say, oh, it's FX risk, is geopolitical risk, is this, blah, 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 which is more of a macro type of thematic, right? But what's happening there is actually something that went in the US from 2001 to 2016, when the biggest market cap companies used to be asset heavy companies in 2001, the GEs of the world and everything. By 2016, it was all tech. It was all technology, or let's call it like a transformed digitally, okay? That same path is what's going on in Latin America. So now what suddenly happened is that this region that has 650 million people in the world, it's just like next door here, very close, okay? 650 million people, it's about 5 to 7% of the GDP of the world, okay? All of a sudden, if there's not a lot of security, people don't want to drive cars, they own their cars, guess what? They'll take Uber. So the three best cities in terms of number of rides, they are just like New York in terms of number of rides, are Mexico City, Sao Paulo, and Rio. Oh, you don't have a trust on the banks and everything. Boom, there's Nubank, largest digital bank in the world, 70 million users built in 4 years.
And Warren Buffett's an investor.
Warren Buffett invested $750 million in their pre-IPO round. So what I'm saying here is that what's going on there, there's an index that is this kind of a digital transformation index. Basically takes what's the valuation of these digital transformation companies versus the GDP of the region, okay? In Latin America, that number is 1.5% today. In the last 10 years, that number went from 20 basis points to 1.5. Great, right? Grew a lot, right? You know what that number is in the US? 52%. In India, is 15%. So if you were to cope just of these digital transformation companies, there are plenty of them in Latin America, from the 1.5 to catch up with India, that's $600 billion of wealth that's going to be created. So that's something that's going on there that's uncorrelated. It's not dependent on the macro side. So you're not playing macro. And what's going on, you talk to any VC or PE growth equity fund in the US, all of them will be telling you LATAM starts to be part of our portfolio, or already is, or it starts to be a part of their portfolio. So I just wanted to kind of give this overview that's either, I don't know how many people here have Latin American exposure, but you should be looking at, even if you're going to have a small exposure to it. And that's across the spectrum. It can be venture capital. Of course, the more private equity traditional will have more macro exposure, but natural resources is also something that's quite strong. So we are very excited of being very at the beginning of this. And then here at DXA, my firm specifically, we built a tech platform that we talk to family offices and investors across the globe for them to be able to start small. I'll start here. I'll look at a direct deal, or I'll look at a fund with $100,000, $50,000, and then that's kind of what we're being preaching here.
Thank you, Oscar.
Thank you.
I just wanted to introduce.
Please.
So we realized that we haven't touched Africa. So Michelle joining a panel right now to talk a little bit about Africa.
No, fantastic morning, everybody. Hope you're well. Yeah, no, it's really exciting. I think we've been doing quite a lot of work in Africa. I'm African myself. I'm from Zambia. And what we're seeing in terms of investments across Africa is actually a really strong growth in startup investment, especially in the tech sector. I think the first half of 2022, we saw something like 3.5 billion. Invested within the tech scene, and really it's being dominated by a couple of markets, which are, Nigeria, Kenya, South Africa, and Egypt. This is where the activity is really happening. But remember, Africa has 55 countries. So in terms of exposure, I think, one of the markets really to think about moving forward is actually is Africa. And what we're trying to see, what we're trying to encourage is actually a little bit more diversification across markets rather than just the concentration on those 4 big markets. Of course, Nigeria being, I think, the 3rd in the world, largest population in the world, and that is growing day by day. In terms of investments, I think is a pretty good market, but it's a market also that's quite complex. So for us at Global Policy House, I mean, we focus on emerging technologies, we focus on blockchain, AI, and machine learning. And what we're actually seeing in these markets where you can actually leapfrog in Africa is a lot more appetite for, yes, tech, but also more real use cases, what we call real use cases around agriculture, manufacturing, logistics, transportation. I think somebody talked about transportation. These are the areas where we're seeing a lot more interest in terms of investment. But I think in terms of looking forward, certainly, I think Africa is starting to see more and more investors interested in participating and supporting. Yeah.
So Michelle, I thought what was interesting when I talked to you yesterday was all the different governments are involved. So you're working with the whole African continent, because I thought it was very difficult to deal with different countries. So can you explain how this all works together in terms of one platform?
And Michelle, talk
Absolutely.
about how we're going to do this event together.
Yes, I was coming to that. Yes, Mark. No, certainly. I think what the advantage we have is that we actually been working with the heads of government. So, Africa is represented by the African Union, which pretty much represents all the 55 countries, a bit like the European Union. And underneath that, we have what to call the African Continental Free Trade Area, which is really bringing together all the African countries. And we're looking at things like regulation and how to change regulation, encourage better investment, better transparency, less corruption. This is what's really happening in the market. And I'm sitting supporting the governments really to understand how they can leverage digitalization and how they can actually use digital to transform things. I mean, Mark and I have been speaking for a couple months now, because we actually want to introduce more work of 361 in Africa, because I think it's going to be a significant market that we cannot really choose to ignore anymore. And I think, back to your question, I think, the difference now is that we're able to actually go into the governments directly to actually provide some advisory, because to be honest, a lot of the governments are not necessarily thinking, wider and bigger than, sort of their jurisdiction. So I think having that CFT umbrella and having that African Union umbrella is really going to help to bring a bit more, clarity and transparency, especially for investors, because, most investors have been reluctant to actually invest in Africa in the last couple of years because of the risk. So what we are doing is actually de-risking. We're trying to de-risk the markets, and we're trying to actually highlight the key opportunities for investment in each of these different 55 countries, rather than just the 4 countries, right? So at the moment, it's being dominated by tech investment in the 4 countries, but we have 55 healthy markets. And that's why we've decided with Mark as well, and we've invited 361 to partner with us to actually host, one of the first biggest investment summits in Zambia, in my country. Zambia is probably one of the few countries that has actually reduced inflation by two single-digit figures. So we've got a whole new government, we've got a whole new, sort of tech scene, but also, we have this summit to really encourage all of you to participate and really get to understand what Africa has to offer.
Stay tuned.
Thanks, Michelle. I'm going to quickly
Four
touch.
minutes, Mary.
Yeah, I'm going to quickly touch on what excites you guys about 2023 and what scares you. Jidris, very quick.
Can I do one
Oh, yeah, of course.
undisciplined thing, just for understanding of who's here in the room? How many of you have international allocations?
Quite a few.
Quite a few. Yeah, so I mean, I'm excited basically about all the news stories and then Latin America and Africa. I mean, we've done through our pipeline companies a little bit of Nigeria and a little bit of Tanzania, but I mean, for that part of the world, it's as I mentioned, it's shopping time, because their flood of money, of crazy money, is decreasing. So you have much more realistic stuff coming in. And so it's exciting. I mean, in terms of worries, I mean, at least in that part of the world, everybody's worried about Putin and war and Ukraine and all that stuff going on. I mean, that's much more felt there, but hopefully he's out of steam by now. So
Yeah, I mean, everything that could have happened in 2022 happened between the war and the Fed increasing rates so quickly. So hopefully, I mean, for me, what scares me is the Fed, and what excites me is innovation. And I think because everybody is squeezed, I think they're going to be much more efficient, and productivity is probably going to improve. Fred, do you want to touch on that? Really
Sure.
quickly?
I mean, I think the biggest kind of question going into 2023 is what will be the lagged impact of the higher rates in the US and globally? Will there be a recession? And at what point will the market bottom? Because I don't expect the last 2 months, the equity strength in the last 2 months, to be a straight line up going into 2023. So I think the big question is, at what point do you overweight equities given a bottom in a weak environment and a pivot with the Fed reducing rates at some point?
Thanks, Fred. Christine, real quick.
Real quick, I think, the confidence, the concern was our market would be high net worth individuals. And so you see the confidence that has shaken, in the last few months. That's a concern. One thing I wanted to mention to help you out, which was also an opportunity, is let's not forget Venezuela. So Trinidad and Tobago, where I am from, is just 7 miles from there. This is a country that had a reduction of 80% in their GDP over the last few years, with 10 million people fleeing. All of a sudden now, you see the US sort of relaxing sanctions. And as you said, it's almost in spite of the macroeconomics. There's so much commerce to be done of people that have been denied basic goods and services for years. So I think that's another sort of, shining light on the horizon.
Thanks, Christine. Oscar.
I'll stop right there. Excites me, actually, the other way around. So I'm very excited about agri-tech. I think that we're living a moment where everybody wants more efficiency on agriculture and also doing better for the environment. And I think the technology is around for there. So we're investing into that strategy now in the first quarter. And also I'm very excited about secondaries in the VC, especially world. We see a lot of amazing opportunities at very discounted prices. So we're also investing into secondaries. That's another strategy we're doing. But what scares me is this prolonged period of higher interest rates and what that combined with the fact of specific cases like FTX and other cases that are blown up make people scared of going towards risk investments. And I think that's really what scares me the most. And I think we need to try to educate investors and tell them, especially people that are locals that live there, that breathe the good and the bad, so that we can actually tell the opportunities as they are, because they're not really on the macro affected, but macro affects investors' willingness to actually put more money to risk.
Thanks, Oscar. And Michelle, real quick.
Yeah, sure. I'll be really quick. I think for me, what really excites me is actually almost relative to FTX. I think now to give the industry, our industry, a lot more credibility with some of us who are actually doing some pretty fantastic work, if I have to say. So I think what we're seeing in terms of the cleanup, right, with companies like FTX, and we're starting to see more regulation coming into this space, something that we've been working on for the last probably 7 years. For me, that really excites me because I think it's going to help to actually clear out the mess and provide some real good use cases like agri-tech, solutions and supply chain solutions. So for me, I think, yes, we've had some negative bits, and I think I'd like to see the media in particular to shift away from that narrative where they're very obsessed with things like, sort of crypto valuations and not focused on the underlying tech and what that can do to transform, right? And in terms of what scares me, I think is more around interest rates, inflation, and how we can actually manage to tame that around the world, because that's going to have such a major impact.
Thanks, Michelle, and thanks, everyone. Thanks for my global, incredible panel, and thank you, audience, for being so incredibly, I'm sorry we couldn't have time for any questions, but everybody over here, you
There's
can,
so many countries and regions we have to talk about.
I know. You can
But
speak to
thank
each
you.
one of them directly.
So thank you,
Thanks, Mark.
everybody.
Come join our 361 firm community of investors and thought leaders. We have a lot of events created by the community as we collaborate on investments and philanthropic interests. Join us.